and welcome to the Q4FY20 earnings conference call of LT Foods Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anirudh Joshi from ICICI Securities. Thank you, and over to you, sir.
Thanks, Margaret. On behalf of ICICI Securities, we welcome you to Q4FY20 and FY20 results conference call of LT Foods Limited. We have with us today Mr. Ashwini Kumar Arora, Managing Director and CEO, Mr. Vivek Chandra, CEO, Global Branded Business, Ms. Monica Chawla Jagia, Vice President, Finance and Strategy, and Mr. Sachin Gupta, General Manager, Finance. Now I hand over the call to the management for their initial comments on the quarterly performance and FY20 results also, and then we will open the floor for question and answer session. Thank you. Thanks to and over to Monica ma'am. Thank you.
Thank you, Anirudh. Good afternoon, everyone, and thank you for joining us on our earnings conference call. I hope that you and your loved ones are all well and safe. I would like to highlight that certain statements made or discussed on the conference call today will be forward-looking statements, and a disclaimer to this effect has been included in the results presentation shared with you earlier. Result documents are available on company's website and have also been uploaded on the stock exchanges. A transcript of this call is also made available on the investor section of the company's website. I would like to begin by taking you through the key highlights of our financial year 2020. In spite of many challenges faced by economy due to ongoing COVID-19, we finished the fiscal year on a strong note with a healthy demand, robust volumes, growth across India and the international markets, and healthy margins. I would like to give you an update on our Q4 financial year 20 performance. The revenue was up by 20% to rupees 1,217 crores on year-on-year basis. The gross margin also expanded by 190 bits to 26.5% on year-on-year basis. In absolute terms, the gross margin was up by 29% to rupees 323 crores. This was also on account of both change in the product mix and the increased share of international branded and organic business. The EBITDA was up by 54% to rupees 150 crores versus rupees 98 crores, and the EBITDA margins were up by 275 bits to 12.3%. This was on account of higher GP and operational efficiency. The PAT for the quarter increased by an impressive 167% to rupees 58 crores versus 22 crores on year-on-year basis. The PAT margin expanded by 265 bits to 4.8%. Our consolidated revenue for the financial year 20 was up by 7% at rupees 4,184 crores. As mentioned in our earlier earning calls, our strategic intent has been to focus on our branded business. With continued focus, our branded business was up by 14%, and the share of our branded rice portfolio increased to 74% versus 69% last year. The gross margins also expanded by 174 bits to 26.7% as there was an increase in the contribution of branded business and the strong growth from all the geographies. This is to further highlight that our premium and mid-price product range achieved double-digit growth on year-on-year basis. The EBITDA margins also expanded by 140 bits to 12.2% versus 10.8% last year. In absolute terms, the EBITDA was up by 21% from rupees 421 crores to rupees 509 crores. That is due to better gross margins and the operational efficiencies. The PAT increased by 45% to rupees 199 crores, while the margins expanded by 125 bits to 4.8%. Now, I would like to update you on all the efforts taken towards strengthening the balance sheet of the company. Company's net worth was up by 11.5% to rupees 1,599 crores, led by strong accruals. The overall debt of the company was down by rupees 235 crores to rupees 1,435 crores. The debt equity ratio improved from 1.16 times to 0.90 times. Long-term debt to equity has reduced to negligible levels of 0.13 times from 0.17 times last year. This is to reiterate that majority of our debt is working capital debt, which is required because of the nature of our business, and our focus is to maintain the debt to EBITDA ratio to less than 3 times. I would also like to give you an update relative to the continued interest from the international investment community in the group. After a rigorous due diligence and negotiations, SALIC, Saudi Agricultural Livestock Investment Company, has acquired stake in Daawat Foods Limited, which is a subsidiary of LT Foods Limited, through its subsidiary United Farmers Investment Company. SALIC, as you may know or as you may be aware, is a strategic partner and a public investment committee of the Saudi government. The transaction in Daawat Foods Limited entails acquisition of 29.81% stake of India Agribusiness Fund, which is sponsored by Rabobank, and 0.1% stake of the Real Trust by the United Farmers Investment Company, which is a subsidiary of SALIC, for an amount of $17.23 million. Please note that there is no dilution in the listed LT Foods Limited. Also, there shall be no impact on the shareholding of LT Foods Limited in Daawat Foods Limited, which shall remain intact at 70.09%. Company was able to provide a rewarding exit to Rabo Fund, which has been partner in this subsidiary for more than 10 years. This new strategic partnership will open up the new opportunities and help LT Foods strengthen its position in the Middle East region. I now hand over to Mr. Chandra for the further business update for this financial year. Thank you.
Thank you, Monica. The branded business revenue of rupees 2,631 crores in FY20 registered a growth of 14%. This is higher than the total business growth of 9%, due to which the share of the branded business in total improved to 74%. Quarter 4 was a particularly strong quarter with a growth of 20% in the branded business. All our business entities have performed well during this financial year. Our India branded business saw good growth in FY20, with the premium and mid-price segments registering double-digit growths. LT Foods had launched various marketing initiatives on these segments on the Daawat brand and specific premium variants like Daawat Biryani and Daawat Traditional. India also strongly promoted its unique product offering of quick cooking brown rice. In quarter 4 of FY20, we extended this health franchise by launching the iron, folic acid and vitamin fortified Daawat Sehat product in the test market. This was supported with print and digital advertising and launched only in the quarter 4 of full year 20, has quickly built up to a good level of consumer demand. You will be glad to note that during this pandemic, Daawat Sehat tied up with an NGO, Feed My City, to provide meals to the needy. Our regional rice business continues to receive good response from the market. Sona Masuri has now created a niche for itself in the quality segment with both the retail consumers and the food service customers. In order to cope up with the twin challenges of manpower and logistics availability posed by the unprecedented crisis of COVID-19, the company has identified and nimbly executed a number of innovative go-to-market approaches. The company joined forces with Zomato and Swiggy to use their platforms for direct delivery to customers. Post enforcement of complete lockdown, a telecaller facility was set up to directly reach top retail outlets in the country and take orders from them. Moving to our US branded business. US branded business also saw double-digit growth in revenue terms. The business has performed well across all channels, and there was a significant increase in the sales for the month of March due to the ongoing pandemic. E-commerce as a channel continued to see a surge in demand in the last few months. Our recently launched ready-to-heat products were very well accepted by the consumers and also experienced a huge increase in demand. The RTH sales have more than doubled in Q4FY20 on a year-on-year basis. Our Europe business has also performed exceedingly well in this on a quarter-on-quarter basis, and it gives me great pleasure to share with you that our Europe business has become PAT positive in FY20. The business has also seen a surge in demand for packaged rice as people are giving preference to packaged brands, taking into account the safety aspect. Our organic business has also seen a growth of 15% in quarter four on a year-on-year basis. While its major product categories continue to grow, the business had experienced a fall in its soybean business in the first half of the year. The company decided to move from the commodity-based soybean business to the value-added soy meal processing-based products. The business has seen a ramp-up in the second half with installation of a dedicated organic soy meal processing plant done in a record time of around 3 months. The plant is running at full capacity to cater to the large orders received from global customers. Another expansion of this facility is now planned in the current financial year, which will help the company achieve even higher growth in the current financial year 2021. I would now like to hand over to Mr. Ashwini Arora. Thank you.
Thank you, Vivekji. Good afternoon, everyone, and thank you for joining us on the call today. I hope that you and your loved ones are all well and safe. As we all know, over the last 2 months, worldwide economy and various industries across India and international markets have been facing a unique situation due to the COVID-19 pandemic. Our primary focus during this challenge period was to service and make our product available to our loyal consumers, along with assuring the safety of our colleagues and manage our operations in the change scenario with agility. We are proud of our colleagues in the manufacturing unit, distribution, the frontliners, and the support function who also ensured smooth operations while working from home as well. During these trying times, all the employees have come together and the company have been able to demonstrate its true values through its action. Needless to say that all the norms prescribed by the government and WHO have been strictly followed at our manufacturing facility and distribution center across the globe. The company's growth has accelerated in the wake of very strong consumer demand for our products and trusted brand name. Our international subsidiary plants are also functioning in line with the increasing demand. From industry perspective, the export of the basmati rice from India are approximately same in FY20, and we have seen a growing trend in Saudi, Iraq, Europe, America, and rest of the world. Iran has shown negative growth. Anyway, our exposure to Iran has been nil, and our global presence is helping us to keep up the growth momentum. India consumption till last year was growing at 13%, and we have been part of this growth journey. The branded business contributes to 26% of market share. We believe that in the current ongoing COVID situation, consumer demand for packaged rice will increase because of the rise in home consumption, especially in the health and convenience segment globally. The HoReCa segment, however, has seen a decline. However, with HoReCa focus on online deliveries and with government announcing opening up of outlets on selective basis in few states, we have seen some pickup in this category. As far as inventory is concerned, we have procured enough during the last procurement season and are geared to meet the expected demand in the current year. As far as the next crop production is concerned, as per the current market data availability, the sale of basmati seed is going more or less following the same trend. The transplantation process is expected to start in mid-June. The farmers might experience some problems with labor with respect to the shortage of labor, but they are working to find out alternative solutions so as to minimize the impact on the basmati production. As far as operations are concerned, there were challenges in the initial phase, but the company is having control on complete value chain and having highly mechanized infrastructure have been able to overcome the challenge and deliver their performance. We have delivered a strong operating performance for FY20 and Q4 FY20. As mentioned in earlier calls, company has been extensively working on its three strategic pillars of growth, margin expansion, and strengthening the financial metrics, which is visible in our financial performance and will continue to do so in the future. To add to these three pillars, company also continue to strengthen its management capability. It has hired a couple of senior level positions across its operations. We will be separately updating on these positions from time to time. Thank you. Now we open the session for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. Congratulations for good set of numbers and particularly on the repayment of debt. Just on coming year FY21, with most of the businesses actually showing positive trend. Like this year, we have paid almost like 230 to 40 crore of debt. And next year, what will be the plan on the debt repayment front? That is my first question.
Yeah, good afternoon, Resham. As I said in my, thing that, we will be keeping the same trend, and we will maintain, the debt EBITDA ratio less than 3, and that's what we are focusing on.
Okay, but from capital allocation perspective, this year you generated like close to 400 crores of free cash after the capex.
The plan is to reduce the borrowings only, whatever internal accruals will come. But I'm just making this statement that we will keep the debt EBITDA ratio because if the paddy prices will go up in the next coming year, that may not be we will be able to reduce our borrowing, but more or less whatever we are not spending in the capex. So the goal is to reduce the borrowing going forward.
Okay. And what would be the capex plan, sir, for FY21?
So next year we have set up 60 crore rupees our capex plan.
And what will be the broader breakup of the 60 crores, sir?
Means where we are spending?
Yes.
So mainly we are spending, one is on, we are putting the power plant, which is cogen power plant. That's the one. The other is we are spending on the warehousing. And thirdly, we are investing in the mechanization, more automation. So these are the three broader areas where we are investing. Repair and capex, maintenance capex is very low. So mainly is the mechanization, and whatever in this quarter we have seen the growth. As I said, we are expecting that more package rice will grow, and we need more packaging machines. So we are investing in that. So at the moment, all our consumer pack machines are running at full capacity.
Right. And so my last question is on overall margin trajectory. How do you see that panning out in FY21, and what will be the levers for this?
So so our in the coming year our both gross margin and EBITDA margin will grow, and the strategy is same that our product mix will change, and there will be in the gross margin there will be impact on the lower cost of the COGS also, and the scale. These broadly these three things will help us to improve our margin.
Okay. And any specific geography where you see this lever playing out more positively as compared to other regions? For example, Europe, you have clearly turned around in the last 1 year from negative territory to almost a positive side. So within various geographies and various segments.
Yeah. So this will of course it will play across geography, but the major thing will play in Europe, America, and the rest of the world. And India, because of this HoReCa impact, we may see the little degrowth in HoReCa business. Of course, the consumer business will grow.
Okay. Right. Yeah. Okay. Thank you very much, sir, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Dikshit Mithun from Shubham Ventures. Please go ahead.
Yeah, hi, sir. Congratulations on good set of numbers.
Thank you.
Yeah. Sir, my question is on inventory. You have given the absolute level of inventory of paddy and rice. So can you give the volumes also?
Yes, Sachin will answer this.
Dikshant, our inventory levels during this year is paddy is 1,93,000 tons, and our rice is 1,40,000 tons.
Okay, and similarly for last year, if you can give for comparison?
It was 2 lakh tons of paddy and 1,27,000 tons of rice.
Okay. So that means the reduction that we are seeing, that is purely because of the lower prices of paddy that is leading to lower inventory, right, this year?
Yes.
Okay. And so can we assume that this lower cost of inventory will help you improve margins in FY21?
That's what I said. It will be a mix of all the things. The lower costs and the products mix. And the scale. All three will help us to improve the margin.
Because we are seeing 15-20% reduction in per unit inventory holding, right, as compared to last year.
Yes.
Yeah. So to that extent, maybe something will be passed on. But if you can quantify what kind of margin benefit that can accrue for us?
Normally, we change the prices after June, so we have to see the competitive landscape in the month of July. Only, then, but definitely, it will help us to improve the margin. How the competitive landscape reacts on the July, August, only then how much this cost we will pass, how much it will be kept. We have to see the competitive landscape.
And so secondly, in your growth, we have seen flattish growth in domestic market. We have seen like 30% growth in overseas. So is there any impact because of logistic issues that restricted the growth in domestic market?
So if you see our consumer business, we call it like consumer pack business, which is 1 to 10, and then there is a 25 kg business. We have seen the growth in 1 to 10 kg. That's our strategic intent. So we are growing. Of course, our export business has grown better because our Europe operations are running now full, and US also has shown good growth. But India is growing as per the category is growing.
Okay.
So we are in line with the category growth.
Okay. And sir, in terms of private label, we have seen sequential big jump in volumes. So that is one time, or maybe that will be maintained for next quarter as well?
So as far as the latest, whatever the trend is going, we are expecting the same trend to be there.
Okay. Because earlier we were trying to reduce the trading to improve the balance sheet, but suddenly we have seen big increase in volumes in this quarter. So will that impact balance sheet next year in terms of higher trading volumes?
That's a more private label sale, not trading. So there are three types of business we were in. One is the consumer business, we call it, a branded business. The other is the private label, and the third is the trading. Trading, of course, we are reducing, but the private label business is where the growth is coming. That's our strategic intent. Wherever the sustainable business is there. So any business which is we are doing private label is all strategic in nature, and that's a very sustainable business.
Okay. And sir, lastly from my side, can you give Europe numbers for this year, EBITDA and PBT numbers for the year as a whole?
Europe had a EBITDA of 17 crores and a PBT number of 4 crores.
Okay. And last year, if you can just...
Last year there was a loss of 11 crores and there was a PBT loss of 24 crores.
Okay. Thank you, sir.
Thank you. The next question is from the line of Shubhankar Ojha from SKS Capital. Please go ahead.
Yeah, hi.
Thanks for the opportunity. Yeah, how are you?
I'm good, Ian. Thank you.
So 3 questions on these European operations. Good part is that you have reported a positive PAT. Can you give some sort of direction for FY21? What are your internal targets for the margin for these European operations? That's one. Second, you had a very high other income in this current quarter. If you can give a further breakup of this other income, it will be helpful.
Sure.
And third is this recent transaction wherein even though it's at a subsidiary level, but can you share some more data on what was the revenue and what multiple did this deal happen, and what was the earlier investment by Rabobank? I mean, they are exiting at 17 million from 30% stake. What was their investment? So these 3 questions basically.
Sure. So the first question is on the you said on the Europe. So this year, we will be the target of EBITDA is in the range of 7%.
Okay.
Yeah, in the range of 6 to 7% EBITDA. That's a industry benchmark.
Okay, so what was the revenue, sir, for European operations? The EBITDA number was 17 crores.
Yeah. So revenue we are targeting in the range of
The revenue for this year was 468 crores.
468.
Yes.
Okay. So you have done a 3.5% type EBITDA, and you are looking for a 7%.
That's in the range. That's what we are targeting.
Okay.
Second question,
Other income.
The other income includes the exchange income. It's majorly the exchange income, and this is a part of the operations income only. So this is as per the accounting we have to disclose in the other income. Otherwise, it is exchange. All is.
Okay.
And third, on Salik, what exactly,
So my question is basically, this unit had approx, I think, as per your press release, it had a 20% revenue contribution to the parent company. So that's about some 550 crores odd. And the deal is happening 30% stake for $17 million.
Yes.
So my question is basically, what was the Rabobank investment?
When 10 years back, Rabo invested in Indian rupees 25 crore rupees and in dollars $5 million.
Okay. So this is, I mean, is it the right way to read it? I mean, 20% of your revenue coming from Dawat Food, and that is getting valued at, say about what? I mean, $50 million, right?
Mm-hmm.
$55 million.
Mm-hmm.
And that's about...
But that's the one thing, that's a purely manufacturing subsidiary of that. All the brands, everything is in anti-food business. So that's a purely manufacturing valuation of the company.
No, so that business is, so my question is that business is getting a valuation higher than the parent company, which has got a value addition and brand.
That's the irony, because I think that answer lies with more on the investor side. But as far as we think that, if, we evaluate our company, the kind of business model we have, the sustainable, profitable, with a global footprint, but normally, the companies globally have a valuation of 15-16 times of EBITDA. If you see.
I missed the initial part of your answer, wherein what is your plan for deleveraging? I mean, what is your plan for reduction of debt in current financial year?
No, as I said, just now, the broader plan is to keep the debt EBITDA ratio less than 3. As the business will grow and we are in the business of, where, we need to aid the rise. But broader plan is in normal circumstances, all the accrual will not go in capex and either reduction in the borrowings or, if needed, to increase the inventory. So broadly, the more focus is in the reduction of the borrowing and take to the level of 2.5 times or less than 2.5 times to EBITDA.
All right. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Sudhir Beda from Right Time Consultancy Services. Please go ahead.
Good afternoon and congratulations on super set of numbers. And sir, one more thing, I am also consumer of your brand, Dawat Basmati.
Thank you.
Brown basmati rice, and it's super.
Yeah.
So my question is, you have done international brand business of around 1,645 crores from your presentation. So what are the geographies, sir? Major geographies Is it include Iran and those kind of countries or it is?
Our major geographies outside India is USA, Europe, and then Middle East, and then rest of the world. As I said, we don't have any exposure for the last 3 or 4 years to Iran. So that's as per, the company's strategy not to get into a country which...
So we don't foresee any threat as far as our exports are concerned?
To Iran, no.
Okay. And so another question is, what is the proportion of rice and non-rice? Because you have certain other business also, like organic revenues and all.
We have two businesses. One is the basmati rice business, and the other is organic ingredient business. So out of the total revenue, approximately 10 to 11% come from organic ingredient business, and rest is all the basmati rice business, which is all supported by our strong brands, which is Daawat and Royal.
And lastly, your major improvement has come, I think, in the margin and in the sales front. So is it because of your branded business are ramping up well in India as well as other US and Europe? The brand is becoming popular over there?
That's one level. Brand is already very popular all over. It's only we are doing acquisition of new consumer and new market. So brands are very, very popular. That's how from where the growth is coming.
Thank you, and all the best, sir.
Thank you.
And soon from the consumer, I will also become shareholder.
Thank you. I will tell you, I don't know how much time, in this COVID time, we got an email from one of the loyal consumers in Bombay, he was brown rice, quick cooking brown rice. He said, my wife is pregnant and she doesn't like any other rice, and we are not able to get, this Daawat brown rice. And we made sure that in 24 hours, we delivered the Daawat quick cooking brown rice to their home.
Great.
Yeah.
Great, sir.
Thank you.
And all the best, sir.
Thank you.
Thank you. The next question is from the line of Sarvesh Gupta from Maximum Capital. Please go ahead.
Good afternoon, Arora ji, and congratulations on good set of numbers.
Thank you.
So first question, sir, on the domestic branded side, we have seen some dip, obviously because of maybe the HoReCa segment and all that. But how has been the market shares movement, if at all, in our favor or against us? Have you gained or lost any market share?
You're talking about the post-COVID or pre-COVID?
I wanted about 4Q, but if you can give us some indication about it.
Actually, it's too early because, Nielsen give a quarterly data. But our, estimate and our, our internal data is telling us that, we are doing good. We are able to maintain our share even in the difficult times. And we are trying our best to be available in all channels, as Mr. Vivek said. We are trying to find new innovative ways to reach the trade, and therefore our consumer will get us. We have done the whole digitization in reaching to the retailers. So answering broad short.
So broadly, we have maintained market share in domestic branded business.
Yeah, that's what our the data will come in the June, and then we are sure that we are maintaining our share. We have a great presence in online modern trade, and as I said, we are trying to find innovative ways to reach our grocers.
Understood. And sir, this investment by SALIC into LT subsidiary, so, what are the financial metrics for this company?
So,
Or maybe I can take it offline also.
Yeah, we can do that. We can do that.
Okay, understood. Now, thirdly, there was this news about one of the large basmati trader, SBI case against that. So because of this environment of leverage, are you seeing some of your competition dying or going away, in a way which will help players like you?
I've told in earlier conference, so there are two types of model in basmati rice industry. If you see, globally, the 15 brands which approximately, the 15 brands which hold the 100% basmati market. And India is, as an industry, is mainly dependent on private label. There are only two companies who have the complete value chain in their hand. And as manufacturing, if someone is getting disturbed, it will, have not, it will, I will not say, it will improve, our margin because of the less competition. And as a brand, it is helping us.
Understood, sir. And this other income that you mentioned is mostly forex gain, is it? The higher other income that we notice in the...
Yes.
Understood, sir. Sir, what is the capital deployed in Europe as of now?
Just a minute. It is roughly 25 million. 25. Approximately 25 million euros.
25 million euros. Okay. Yes. And sir, if you look at the cash flow statement in the last 2 years, we have done capex of 120 crores and in the last 2 years. So, if you can just give a broad indicator of what is the split of this 90 crores and 120 crores that we have spent on plant, property and equipment, sir.
In the previous year, the cash outflow of capex was 60 crores. The remaining part is the exchange fluctuation. The exchange one is, in that 60 crores, the major capex was in India. In India, we have installed new silos. There was a mother warehouse that was installed at our Bhangar facility. Mother domestic warehouse.
So we have built a very highly mechanized distribution center near Delhi, from where we will supply to the whole of India and to improve our service level and less dependent on labor. Just to whatever the last year capex we have done in either in the silo and mechanizing our distribution, that's how we were able to service even this difficult times, because as a company now we have very highly mechanized operations.
Understood, sir. And sir, you had mentioned in an earlier interview, I think that we will come to know by end of May that what is the impact because of COVID on paddy production. So do we have some visibility, sir, in terms of A, will be getting sown this crop season, and B, what is the likely impact on the paddy prices that we will have to procure?
As I just told that, the initial survey is saying that, the seed is selling more or less the same. And the transplantation will happen, will start happening in the 15th of June. And we are expecting that there will be some problem on the labor shortage, but I think farmers are making the alternative arrangements. So in nutshell, we are not seeing the much impact on the production till time, whatever the indications or trends we are getting.
Understood, sir. And lastly, if I may ask one more question, sir. So if I look at your private label business, 2-3 quarters back, it was on a higher trajectory, and then we kind of lowered it. And then, of course, in Q4, I think we got a very good opportunity to scale it up back. So that is understood from an opportunity point of view. But from a strategy point of view, since we wanted to also increase our margins on a sustainable basis to increase the return numbers, what is the strategy around private labels, sir? Are we, going to increase it in equal proportion to branded business, or how do we look at our private label? I mean, trading part is understood that you want to decrease it, but private label strategy is something that I was not very clear about.
Yeah. So private label, as I said, so we have two areas where we will grow business. One is the brand, where we will acquire new consumer, new distribution. Private label is business we do from the ROIC perspective, and so we are, as far as ROIC is concerned, we have set a benchmark that below this we will not do a private label business, and only private label business we do which is sustainable in nature. So we don't do any private label business which is a transactional kind of thing. That's how the major private label business happen in Saudi Arabia and if I talk about the industry, Iran and Iraq, and we don't have much exposure on that. Whatever the private label business we have is either in Europe or America, that too with the organized stores and little bit in the.
Understood. What is this target ROIC that you below which you would not do? What is that number, if you have a range or a number that you?
So range is we will not do any business which has lesser in private label business especially is less than 15%.
Understood, sir. Thank you, sir.
Thank you. The next question is from the line of Chintan Desai from Param Capital. Please go ahead.
Good evening, sir, and congratulations for the good set of numbers. Sir, just wanted to understand the insights on how has been the situation post-COVID in India as well as our overseas markets. Has the offtake has increased, or how is the current scenario?
So whatever the trend we are getting is across globe the home consumption is growing. So the only HoReCa is impacted, but whatever the home consumption has grown, as far as our company is concerned, we are able to offset that whatever the loss we have done in the HoReCa business. So overall, if you see as a category, 25 to 30% of basmati consumption is in HoReCa and 70% in home.